Take a good look at that sparkle. As of today, May 22nd, 2026, buying a piece of high-end jewelry isn't just a luxury. It looks more like a genius venture capital move. Right now, gold is trading at an incredible $4,507 per ounce, while platinum sits at a massive $1,931 per ounce. Between 2024 and 2026, the precious metals market didn't just grow, it experienced an absolute economic earthquake. If you've been wondering why the price tag on luxury went completely off the charts, here's the wild breakdown of how it happened. The king of safety. Gold now sits at $4,507 per ounce. Known as the ultimate hedge, gold reigns. Back in 2024, gold was trading at a respectable $2,300 an ounce. Today, it has shattered records to clear over $4,500. This massive surge was driven by a global phenomenon called De-Dollarization. Central banks, led aggressively by China, India, and the BRICS Plus nations, started ghosting the US dollar. Fearing future asset freezes and sanctions, they poured trillions into physical gold. In fact, many countries began physically hauling their gold bars out of Western vaults like the UK and bringing them back to their own soil. When global trade gets volatile, everyone wants the one asset that belongs to no single government. The crisis of scarcity. Platinum, $1,931 per ounce. While gold was busy rewriting the rules of global banking, platinum was facing a completely different crisis on the world stage. Platinum's massive run-up wasn't just about geopolitics. It was about a brutal, physical lack of metal. By early 2026, the global market slammed into a structural deficit of over 1 million ounces. Above-ground reserves fell to critically low levels, leaving just enough supply to cover about 5 months of global demand. With the safety net completely gone, the entire global market became incredibly sensitive to any sudden wave of buyer interest. The perfect supply chain storm. And then came the supply chain crunch. South Africa, which produces over 70% of the world's platinum, suffered massive power grid instability and aging infrastructure, crippling mine output right when the world needed it most. To make matters tighter, the green energy transition shifted into overdrive. While platinum has always been vital for traditional cars, its role in hydrogen fuel cells became the new holy grail for the commercial transport sector. As demand for green tech exploded over the last 2 years, the mining sector simply couldn't keep up. On Wall Street, hedge funds and institutional investors saw the writing on the wall and piled in, creating a massive feedback loop that sent prices to the moon. So, when you look into a jewelry store window today, you aren't just looking at fashion, you're looking at history. To put it simply, gold doubled because of a shift in global trust, as nations looked for a neutral haven away from the US dollar. Platinum skyrocketed because of pure, unadulterated scarcity, as a vital green tech future outpaced a struggling supply. It turns out that hard assets are the ultimate survivors in a chaotic world. So, anyone feel like doing a little window shopping?
Thank you for watching. Let us know what you thought of the price of gold. Do like and please subscribe.